Good afternoon, and welcome to the end of week market review for Friday, April 5th, 2013. You're going to see that by looking at our market barometer, we are in a declining state, with our US market declining bullish and the Canadian market declining bearish. Our agenda is going to be going through a couple of things. We're going to start off by taking a look at the market news and then take a look at some economic reports. We're then going to go ahead and look at some technical analysis charts for both the S&P 500 as well as the Toronto Stock Exchange. While we're doing that, we'll be looking at daily and weekly charts. When we look at those charts, we'll be looking at short-term and long-term time frames. We're then going to go ahead and look at our volatility index review, and finally one of our great picks. So we can see that the markets definitely did end up down. In a little bit, we'll go through one of our jobless reports, and you can see the increase there and how that's definitely affected the markets. But we've had a few other things going on, some concern out of North Korea, and obviously the general market conditions themselves. All in all, the Dow Jones is down 0.28% right now, and the S&P 500 down 0.43%. If we shift gears and look over at some of our commodities, you're going to see that oil is down 0.81%. This puts it to $92.50 per barrel. We do have silver up 1.92%. This puts it to $27.28 per ounce. Obviously, we've also got gold up 1.89%. This puts it to $1,581.80 per ounce. And finally, we can see that the US-Canadian pair is up 0.47%. Right now, that puts it at 1.0174 pips. So definitely quite some movement this week, considering the amount of downtime that we've had. So we can see a large portion of our losses this week came from our jobless reports. We were expecting 340,000 some odd reports. Instead, we end up with 385,000. So with the additional amounts there, we definitely saw a weaker Thursday and definitely a weaker Friday. Right now, we're looking at the S&P 500 on a daily chart. You're going to see right now that we're being squeezed between 2 points of support and resistance. Our overhead resistance is the psychological level of resistance at 1575. That was from a cycle high that was established near the beginning of March. Our support is a rising trend line that was established in the middle of March. Right now, it's squeezed right between the two of them. And given the fact that our MACD is declining bullish, and with the black line down below the blue line, we would need to suggest that it's very likely that the support is going to be broken, where we'll end up breaking down even lower. If we do, we could end up going down to 1550 or even down to 1525. Right now, we're looking at the S&P 500 on a weekly chart. You're going to notice about 1 year's worth of data. What's important to note here is that although things are looking kind of negative on the daily chart, we're still showing quite a bit of strength on the weekly chart. And it actually hasn't even had a chance to come down to support yet. So absolutely things are looking a little bit worse on the daily, but when you take a look at the big picture, you can see that we're still well away from our key support level. This is further emphasized when you take a look at the S&P 500 on a weekly chart, but look at 5 years worth of data. You're going to see that although we've had a bad couple of days, we've had an incredible run since the beginning of September and October. And we've also seen that this run has lasted since before 2009. So all in all, great market conditions. Although for the next couple of weeks, it's very possible that we might not see very much trading. While looking at the TSX, you're going to see that it's broken down below some significant support levels. And when it did break down, it broke down in a very large way. It's possible that we'll end up finding some support around 12,200, but we're not going to be betting on anything at all, especially considering that the MACD is declining bearish with the black line down below the blue line. In fact, we've got both lines falling and both lines in bearish territory. So this really is considered the worst of the worst as far as the MACD goes. While looking at the TSX, when you look at the weekly chart here, you can see the large decline that we've had, and you can see that it's actually pushed us down below some support. So the TSX is not looking very strong right now. We're going to be trading the TSX with some extreme caution. And looking at the TSX here on that 5-year chart, you're going to see similar results here where we've been pulling back off of support. Now you can see that if you look very carefully, you can see that we're trading below a previous cycle low, which means we are in fact downtrending right now. Though when you look here, you can see that there's several points of support which can hold the TSX up if things start to flatten out a little bit. Finally, we're taking a look here at the volatility index. You're going to see that it's currently trading at 13.92. This was after it opened up quite high, almost reaching to a high of 16. We know that right now it's been trading very steady between 12 and 14, so we don't need to be too concerned with what we see. Obviously, we can see that near the end of February, there was a bit of a spike where the volatility indicator did work itself up, but it did work itself back down again. In fact, it actually worked itself down even lower. So whether or not we're truly going to be at a point where the markets are going to continue to fall, we really can't say for certain. But what we do know is that the volatility indicator is still quite level and isn't signifying that we're going to be having large declines. Now, with that said, if you have any questions, please make sure that you're contacting us at either our email address or our phone number, both of which are listed on the screen. And as always, we would encourage you to continue to trade by the books. You never want to deviate away from your original trading plan. Ultimately, though, any trading decision that you make is your own, so make sure that you're always exercising caution. This has been the end of week market review for Friday, April 5th, 2013. Ciao for now.